There's a financial trick that powerful people have been using for years. You create an asset, you borrow real money against it, and you walk away with cash while everyone else holds that risk. Trump's crypto project just did it in public. And because it happened on the blockchain, we can see every single transaction. So let's walk through exactly what happened and, more importantly, how that move actually worked. World Liberty Financial, WLFI, is a crypto project backed by the Trump family. Donald Trump is listed as Chief Crypto Advocate. Eric Don Jr., Barron, all listed as Web3 ambassadors. So this isn't some anonymous DeFi project run by guys with cartoon profile pictures on things like Twitter. This has real names, famous names attached to it. Now, I want to be clear about something before we go any further. This video isn't about Trump politically. I genuinely don't care which side you're on. What I care about is the financial structure of what just happened. Because this is a playbook. And the more you understand it, the better you'll be able to spot it. Whether it's a Trump project, a celebrity token, or the next thing that comes along that looks legit. So let's actually understand what they did. World Liberty Financial launched as a decentralized finance project. DeFi, if you're not familiar, basically means financial services that run on the blockchain without a traditional bank. And look, DeFi can be genuinely interesting. The idea of open, permissionless finance. There's something real there. But DeFi also has almost zero regulation. No disclosure requirements, no independent board sign-off. No one checking whether the person lending happens to be best friends with the person borrowing. WLFI has its own token, called World Liberty Financial. They sold it in a pre-sale, regular people bought it, and 80% of that pre-sale supply is locked, meaning most buyers can't even sell yet. Keep that in mind, we're gonna come back to it very shortly. Okay, so here's where it gets interesting. WLFI also built something called World Liberty Markets, a lending platform built on top of a protocol called Dolomite. Dolomite's co-founder, a guy named Corey Kaplan, is also an advisor to World Liberty Financial. He's listed as their Chief Technology Officer. So World Liberty Financial built a lending product on their own platform, and their own guy co-founded it. And then WLFI's treasury wallet deposited $5 billion of their own WLFI tokens into the platform as collateral and borrowed $75 million in stablecoins against it. Now let me explain why this is insane. WLFI tokens, they control the supply of. They can mint them. The token has very thin trading volume, meaning there isn't a deep market for it, which means if they ever have to sell those tokens to actually cover what they borrowed, the price would absolutely collapse. The collateral is only worth what someone will pay for it. And then there isn't even enough buyers to absorb $5 billion in WLFI tokens without the price going to absolute zero. In traditional finance, this is equivalent of a company using its own stock as collateral to borrow cash from a fund that their CFO also happens to run. That would require disclosure, regulatory approval, independent oversight. In DeFi, there are no guardrails. So here's the part that actually affects the real people that invested in this project. When World Liberty Financial dumped 5 billion tokens into Dolomite and drained 75 million in stablecoins, the pool hit 100% utilization. That means every dollar available to withdraw has been borrowed. And regular depositors, people who had put their own money into that pool to earn yield, couldn't get it out. The withdrawal button was essentially frozen. Not because of a hack, not because of a market crash, because one entity with insider access to the platform had borrowed everything. And then they proceeded to go on X or Twitter and called it criticism. They called it FUD, fear, uncertainty, and doubt, if you don't know what that means. Their exact words were, "We are nowhere near liquidation, and frankly, even if the markets move dramatically against us, we simply would supply more as collateral. More collateral of the same token that they borrowed." And if they managed to do this, the World Liberty Financial token would drop. It already did 12% in a single day. The best thing to take away from this story is that it's not actually a crypto story. This is a story about how the financially powerful have always found ways to convert paper value into real cash without triggering an alarm bell. If anybody else did the same thing, it would cause massive panic. Curve Finance did this in 2024. Their founder borrowed nearly $100 million in stablecoins using CRV, its own token, as collateral. When that unwound, $80 million in forced liquidations. Other people's money gone. The pattern is always the same. You create an asset, you use that asset to borrow real money, you then send that real money to an exchange, in this case Coinbase Prime, where you can convert it to cash, and then you walk away with real dollars while the asset that you used as collateral stays in the books, and the price will stay the same as long as nobody ends up selling. This is not illegal, and it's not even necessarily unique to crypto. But what makes this version worth paying attention to is that it happened on a public blockchain. Every wallet, every transaction, every transfer visible, it's traceable. The only reason why we know this is because it was on the blockchain. On-chain data exists. Imagine how many versions of this happen in places where no blockchain is present. And what's funny is World Liberty Financial says they're fine. They said that they'll add more collateral if things go wrong. But the people who couldn't withdraw their money this week didn't get to decide whether they were comfortable with that risk. They just couldn't get their money out. The most important financial literacy skill you can build isn't knowing which assets to buy. It's learning to read the structure of a deal and ask yourself who benefits if this goes right and who's still holding the bag if it doesn't.